Most traders who have watched my videos this year know that I have been incredibly bullish on gold and silver. But I'm actually seeing something very rare happening right now, which is for the first time in a while, my system and strategy is actually suggesting further downside in gold prices. I want to talk more about that and follow up with my thought process from yesterday's video. If you saw that, if you haven't, feel free to watch that one after this. But I talked about gold and why I think we may actually be getting a bit of a topping signal that has at least short-term downside ahead of it. We'll also be discussing indices in today's video and some key milestones that we hit last week, which I think set up the next move for indices. Are we topping or is there more room to go? We'll talk about that in today's video. We'll also talk about the US dollar. Is this thing actually bottoming on a longer term scale, which has huge implications for all other markets, whether it be, other currency pairs or indices, gold, silver, etc. The US dollar bottoming could actually signal some really big stuff. And finally, we'll talk about whether or not this risk on kind of rally we've seen recently is poised to continue or if there's something brewing under the surface. All I ask as we get started is if you could help me out, hit the thumbs up button on the video down below and subscribe if you're new. Let's go ahead and get right on into it. And just a heads up, we just kicked off our biggest discount of the entire year. It is officially here, our Black Friday discounts. It is 40% off the Edge Finder or our VIP group. All of the information on this can be found in the description down below. Don't miss your chance. It is the best discount that we do all year long. And just a heads up, the Edge Finder is a one-time purchase for lifetime access. You don't have to repeat buy or pay any sort of subscription fees. That is, kind of a one and done payment to get access to the tool, which is sort of rare in the trading space. I know everybody's interested in doing subscription models as for their products, but at A1 Trading, we've chosen to go for the one-time purchase, and we found that a lot of really kind of serious long-term traders actually prefer that, the one price, especially when it's 40% off rather than the repeat subscription purchases into Continuum. But with that said, let's go ahead and jump into some charts and talk a little bit first about this gold move. So yesterday, I actually hinted at why I think gold may have some short-term bearishness. And let me just go ahead and disclaim something. Like, I am one of the most bullish long-term people on, precious metals. I own physical silver and gold. I own stock or ETFs to buy and hold gold and silver ETFs as well. I am very bullish long-term and have done really well precious metals trading to the long side this year. So when I tell you that I'm getting bearish signals on gold, trust me when I say it is against my gut reaction, which is kind of the perma bull in me with gold and silver. And yesterday I made this post about how I think gold may have some downside, and people were upset. People were like, Nick, this is foolish. Gold is going to rip higher. Central banks are buying. And it's like, I get that. Trust me, I get that. I am a super bullish long-term investor in precious metals. But sometimes as traders, we have to look at the data and we have to look at what's in front of us and recognize that maybe this momentum on gold, maybe it has some further cooling off to do. We'll talk about that here. Like I said, we've got a lot to do. So let's jump right into things. I want to start with gold and follow up with the synopsis that I gave you in yesterday's video, because I'm going to admit something. Yesterday in my video, I was caught completely off guard by the Edge Finder's bearish reading that we got. Check this out. So gold is getting a -6 bearish reading. -6 just means that most of our indications here are suggesting weakness for precious metals, or specifically gold. And I thought this was a really, it was a sticker shock for me, because I was like, what? Oh my goodness, bearish on gold? This hasn't happened in so long on the Edge Finder. I cannot even remember the last time Edge Finder gave a bearish reading on gold. It's been so long. And why? Well, because momentum has been to the upside predominantly for the last few years. And a lot of data has suggested, rapid rate cuts, et cetera. Well, without rehashing everything I did in yesterday's video, I do want to just discuss what Edge Finder is seeing. Edge Finder, from a targeting perspective, is looking at a move back down to 3,800 to 3,700 in gold prices, at the most extreme with a 3,682 target here on it. How does it come up with these targets? It uses some standard deviation on price action, and we can see that some interesting things are taking place. On a longer term basis, the moving averages are still bullish for gold. This is why I'm not not long-term outright super bearish on gold. But in the short run, I want to clarify my thought process on gold here, because yesterday I mentioned that I'd be, looking for some potential bearish setups in the short run. I do want to clarify though that I'm proceeding with caution and will not be taking a giant short position on gold, because gold is in a long-term, what I believe to be a long-term secular uptrend. I think precious metals have much further to go in the coming years, but in the coming months, we could have some downside. And remember, this is a channel about trading. Trading doesn't mean necessarily that if I short this thing, I'm shorting it into, I'm looking for a move back to 1500 gold. I'm not trying for that at all. But I do want to look at the 4-hour chart and show you something. So the daily chart looks very bullish, but when we drop down to the 4-hour chart, we start to get an interesting change in structure. We had a topping or a double top that actually kind of confirmed when it broke with decisive movement lower at the 4,200 level. And I think that if we go back to the daily chart, just as a targeting perspective, Edgefinder, I mentioned looking at 3,800, 3,600. I actually really agree with that potential pullback targeting area, because that puts us squarely on the 100 and potentially even the 200-day moving average. Again, I think that this move in gold could very healthily, I don't know if that's a word, I don't think it is, it could be a very healthy corrective pullback for gold on the big picture. And to be honest, I would love to see this as a long-term buyer of gold, to see prices push lower here. And so from a trading perspective, I look at this thing with new lens now that I have Edgefinder confirmation for bearishness. And I have to kind of correct my perception yesterday. And I want to clarify that I actually do think that there are some possible short-term, again, small risk because we are in a long-term uptrend. I think there's some possibilities where I actually get short on gold prices. And it's, again, I say this so cautiously because I haven't been short gold in a very long time. But I like this 50% retracement, and I'm going to watch this level going into this week. So here's where I'm at with it. If gold is going to rally hard, I want no part in it. In fact, I'd prefer to just kind of get out of the way and hold on to my long-term positions that I have in gold. So by taking a short trade, right, my thought process would be it truly is a short trade, like as in short selling, but also a short term trading. It's not something I'm looking for, months to the downside. Could it turn into that? Maybe. Just with my strategy, I like to trail stop. So if this thing were to just melt away for the next 3 months, I could get stuck in a nice winning trade. But that's sort of not my thought process. My thought process is this is about a 1.8% stop loss distance move. So if we were to get a rally up into this area of resistance on the 4-hour chart, we saw sharp rejection here, and we saw this 61.8% retracement level, which aligns nicely looking left with where we broke structure here. This is where I'm looking for downside. So I do think you could get, again, that concept of where we just got done discussing from Edgefinder bias, right? We could get a little bit of a push up into this region, but then maybe the move is that $3,600 an ounce retest that we got done discussing. So I don't know. It's interesting because it's been some time since I've taken any sort of short positions on gold, but I'm seeing the setup, and it's been a minute. So it is very much one of those things where my gut reaction is I like being long gold. I like holding gold long term, but we are traders. And at the end of the day, when you have the data behind you on Edgefinder, right, it's not a guarantee by any means. And again, I want to clarify, if you're bullish on gold and you think differently, then cool. You should, as long as you have a system and a strategy and a reason for doing your thing, you do you. I am not saying by any means that I know gold is going to go lower. I'm just telling you that my system and my strategy, you must have yours. I insist that if you are doing what you're doing, you're not just looking to copy people or look for handouts or look for, so-and-so online to tell you what's going to happen next. Nobody can with certainty. But I'm telling you that right now, my positioning in terms of gold is going to be pretty bearish going forward, and probably looking to sell rallies until proven otherwise. Again, very big change of tone. But it goes back to where we started on today's video. Are we on a risk-on environment, or a risk off environment. And I want to talk a little bit more about that because we're going to continue to look at some stuff, but I wanted to look at some sentiment here as well. Now, I know that this is out of date, right? We're going to look at the commitment of traders data. You can see our disclaimer here, delayed due to the government shutdown. But I still wanted to just look at this from a longer term perspective. The commitment of traders data, where are we at with things? Well, I'm curious, when we start to get this data again, when the government comes out of its shutdown period, what's going to happen with the US dollar? What's going to happen with precious metals? Gold, if we take a look at gold, part of the reason I've been so bullish on it the last few years is because institutions have been very much bullish on it. And I had some good questions from audience members who said, Nick, how can we really trust any signals from Edgefinder if the data is delayed due to the shutdown? Well, that's a great question, but here is the thing. Everyone's data is delayed. We're all, as traders, operating in the blind, right? So just because Edgefinder has the latest available data, but the latest available data is not so current due to the government shutdown, it doesn't mean that that data is ruled useless. This is the most available data that we have. So to be fair, this is another reason why I'd be cautious with gold shorts. Institutions have been pretty long in terms of gold. But what I found kind of interesting is that they were long going into the end of September. But who's to say that end of September, which is, right around here, maybe they used this kind of rally in gold prices to go ahead and hop out. Maybe they started to accumulate short positions. Typically, I'll tell you this, when the price action is sharply selling off, you later find that the commitment of traders data was institutional money selling. So we may have truly seen institutions in this blind period start to take off some positions in gold. We've seen some developments, like for example, trade dynamics significantly improving between the U.S. and its opponents. The reason I bring that up is that's been a huge catalyst this year for gold prices to the upside, right? That was what caused this move here and this move here. Both of these coincided with worries about trade dynamics with the U.S. That, again, the market does not like that. That is very uncertain. You're breaking the system, right? The system doesn't like to be broken. When the system is threatened, the system runs to gold. And so if we're seeing some of that dial back, should that operate the same way to the downside? Should some of that relaxation in tone between China and the U.S. and U.S. and other, allies? I mean, we've seen many places sort of strike a deal with the U.S. If that's the dynamic, perhaps this fuel to the fire that was upside for gold, maybe that's now going to get priced out or pulled out of this. And then I also get a lot of people will say, well, what about rate cuts, Nick? But remember, there's two types of rate cuts. There's rate cuts that you need desperately, and there's rate cuts that you can do because, inflation's cooled off. And I think right now the market is kind of excited with the idea that we may be kind of getting the latter, or whichever one was the good one. I think it was the latter. But point is, I think that if we look at the economy and the economic data that we do have, we could take a look at U.S. economic heat map really quick. Let's just pull this up and see what we've got. So we have growth metrics that look okay, right? We have GDP growth came in 3.8%, better than expected. Manufacturing PMIs still not above 50, but better than expected. Services PMIs were a miss. Retail sales were stronger than expected. Parts of the economy still seem to be holding up okay. The consumer's still spending money. Inflation is at 3%. Now, it is still 3%. That's above 2%'s target, but it's not 3.1%, which was feared. So we call this a better than expected inflation print. That's why it's good for stocks. The point is we have some stuff here that the bulls are holding on to, and this is why the stock market's rallying so much, is because you have growth signals in the economy with inflation not running away from us, right? And so you also take a look at jobs numbers. This is the biggest catalyst of like, oh, well, that's super bullish for gold. I'm going to watch this, but this is outdated data to an extent where we have not received new non-farm payrolls since September 5th. So it has been some time since we've gotten new economic data on the jobs market. Now, of course, when this data comes in, we'll update on the Edge Finder and we'll see what it says. And maybe my bias on gold changes. But right now, as traders, all we can ever do is operate with the data in front of us. So Again, just a reminder too, also, by the way, like I said, if you want to take advantage of the Black Friday discount and use this stuff as that new data comes in, I highly, highly recommend, if you've thought about getting the Edge Finder in the past, take a few minutes today and just review the Edge Finder on our website. I'll leave all the information linked in the description down below to where you can get 40% off the Edge Finder for a limited time. The promo code, by the way, that you punch in at checkout is YTVIP. Literally write this down. If you are like, I'm going to get the Edge Finder this month, write this down somewhere. I don't know. Put it on your desk. Put it in your notes. I don't know. But grab it because, again, it's the lowest discount that we do, or the lowest price, highest discount that we do all year long. And again, if you're somebody who takes macro seriously, if you want to track, seasonality, if you want to track market sentiment, institutional positioning, I think our tools are some of the best in the internet. So I'm a little bit biased since, we built them, but I do genuinely think and believe that the tool is worth every penny. And if you've been waiting, here's your chance to get it for a low, low cost. With that said, I also wanted to take a look a little bit further at some sentiment before we get into the indices. So crowd sentiment, where are we at? Crowd sentiment has gotten more bullish, definitely more bullish. Take a look at the put to call ratio. What we see here is that when this indicator goes low, that means that there's a lot of call volume in the options market. We look at the call versus put options volume because it gives us a real strong indication as to where money is flowing. So if people are buying calls aggressively, it tells you sentiment out there is looking pretty bullish. And, the market's near all-time highs. At the all-time high, you can see there was a lot of call buying. We typically see that. And so we've seen a little bit of that come off, but back into neutral territory. If you get a downside move, what typically happens is puts usually, not every time, but usually get higher, right? So you can see there's a little bit of a sell-off here. Put call went very high, suggesting high put volume. I tend to do a lot of my buying. By the way, this is one of my favorite indicators. I typically do a lot of my buying when you get these high put readings. In fact, one of the most recent successful trades that I've had was this extreme reading that we got back on October 10th. We had the put to call ratio go high, showing a lot of put demand in the market. A lot of fear came into the market, and I bought that dip. Part of the reason for that is, of course, Edge Finder was bullish and still is bullish, actually very bullish, I should clarify, on Edge Finder. On the top setups page. So what we can see is it's getting a 9, indices in general, +9 for Dow Jones. Chinese stocks are getting bullish readings, S&P 500. Bitcoin, we're going to talk about that one. Nikkei, right? So what we have here is we have a risk-on oriented market. I mean, this, you could literally, I'm going to get out of this, you could literally screenshot what I'm looking at. This is an example of a very strong risk-on, right? Risk-on. If you're not familiar with that term, it's an environment where bulls are aggressive, right? They're getting into risky assets because they believe there's better returns in these things ahead. And again, they carry more risk, but people feel that risk is worth putting on. That's the risk on policy, right? And so when I say risk on, right, NASDAQ, Bitcoin, S&P 500, those things bullish, while gold and TLT and bonds, et cetera, are getting bearish readings. That's a risk-on environment. And so I actually think that Edge Finder is still poised. It's been poised already for risk-on rallies. I still like the call here. I still like, until something comes along and knocks us down here, and until something changes, stick with what's working. That's my personal opinion on this. Of course, no financial advice on my channel ever. But when I look at the NASDAQ, for example, right, which I'm already long, I want to show you the technical charts, and I want to show you those earnings things I keep accidentally showing you on the screen. I'm going to show you that in a second. But let's first of all do the NASDAQ chart. So I am still long. If you've watched my channel for a little bit here recently, I got long the NASDAQ right here back on October 5th. My initial stop loss was just below here. I trimmed my stop loss to this point. I've now trailed my stop loss into profit below these prior all-time highs. Great. Now you're caught up on the trade. So I am still long NASDAQ, and I've had a lot of people saying, Nick, shouldn't you bank your profits? But I don't trade like that personally. I like to trail stops and let the market take me out when it's time to get out. And so I'm willing to hold through if you get a pullback. I would just expect, not a guarantee, by the way, of course, but I have to be careful with my language because, again, there's a lot of novices, that new people who are just getting into trading, watching. There's never certainty in markets. I should always disclaim that in my videos. We never know with certainty what's going to happen next. But I'd be okay, I'd be comfortable with the possibility of holding NASDAQ through a little bit further of a decline and looking for, that rally to continue. If it fails out, if we can't hold 25,200, this area on the NAS, I'll take profits, right? When I say take profits, I will, via trailing stop, right, take a profit on the trade that I'm currently in. So I am in a win-win scenario. If the market wants to come down and fail out at support, then I take profits. And if the market wants to keep going, then my plan is to trail that stop loss further in. But why am I still in the trade? Well, there's only one reason. It's because I think there's more upside. If I didn't think there was more upside in the NASDAQ, then I wouldn't still be in the trade, right? Because I look to price to guide me, and I'm looking at momentum and I'm saying, okay, fine if we want to pull back, but again, I'm looking for buyers to step in. We also have this gap. So we have two areas of big support here on the NASDAQ below price right now. I would actually say three. You have this low from this past week, right? This is sort of your intra-week low. Of course, the gap opened. We pulled back intra-week. That was the low. So I think that's like step one. You have a minor support level there. You also have on the daily chart the gap open and the gap window. I'm not sure. I'm missing my phrases here, but we gapped up last week. That area, generally speaking, is a very strong level of support. In my view, I think that would likely hold. If we come down to test that area, I think you probably get a sharp reaction off of it. If you don't, my second line of defense, I guess my third line of defense, is this. So let's call it these two, right? And then this is my third. My third is the prior all-time highs. So my thought process is, as we go into this week, we should, if the bulls are going to stay strong, we should see them finding this area as we pull back. We should find these areas as areas that buyers are stepping in. If that is not the case, then it is time for me to admit the trade may be turning around and I take profits. That's it. That's how we map out a trade. That's how we manage a trade. And what you'll hear here is, if you are listening carefully to my language, it is incredibly deliberate with how I'm saying things. What I mean by that is that I am not saying I know NASDAQ's going higher and that's why I'm leveraging my whole account and everything is all in on the NASDAQ long. No, that is the language of people who do not know how to trade. People who do know how to trade understand very clearly this is an endless game of probabilities and uncertainties. We never know what the market's going to do next. We can only make educated guesses and make good risk management decisions. That is all we as traders can do. We do not have certainty of where price goes. Price is like an animal. It wants to, you can run around, it can go all over the place, right? We as traders, our job is to try and tame that animal the best we possibly can. With that said, my thought process on NASDAQ is buyers should come in, and if we don't, I'm out of there, right? Take profits, move on. But that's my bias on NASDAQ. I think that the rally can continue. Part of the reason for this, I now want to back my theory up here a little bit further, is, first of all, let's take a look at some of the indices. And I'm going to show you this new feature. We just added a new, let me do this, only, and then only. Okay, check this out. We just added a new moving average heat map page on the Edge Finder. This just helps you to get a overview of strongest moving charts or weakest moving charts if you're into that. Take a look at this. NASDAQ, Nikkei, UK 100, Dow Jones, S&P 500, and that's going to be our list. What do you see here? All bullish moving averages. And some will say, well, that means it's stretched. That means it's going to reverse. I say momentum is fully swinging in favor of risk-on assets right now. Again, could turn around at any moment, but until proven otherwise, momentum favors the bulls. And so again, when we look at NASDAQ, right, let's put our moving averages. You can see it visually here. We got everything aligned for further upside. And you might say, well, that's a bear signal because everyone's bullish. Well, what about over here? What about over here, right? What about over here, right? When moving averages, when momentum favors the bulls, the wildest thing is, it's so fascinating to me. so many people look at this and they say, that's a bearish signal. It's got to come down because, markets are too stretched. And it's not unreasonable to think, okay, NASDAQ is incredibly bullish. We've got to have a pullback at some point. You're right. Look, you're going to be right if you keep saying that. If you keep saying NASDAQ, S&P 500, Bitcoin, all these things need to pull back because they've gone on for too long, you will 100% be right eventually. The problem is the NASDAQ going to go up another 10, 15% into the year's end and into 2026 before we get that move? And by then, what if the move is this? And that's it. And then it keeps going. I'm not saying that's a certainty because, again, I reiterate in my videos over and over and over. I'm not saying like, oh, yeah, that's going to happen and you're an idiot if you don't believe that's going to happen. Like, we could have something different play out by all means. My point, though, is momentum just favors continuation. It doesn't favor reversals. That's the whole idea of momentum and why it's integral to what I do in markets. And what it's also finding in EdgeFinder is when we look at top setups, you can see we have a whole technical score that is centered very much about seasonality and momentum. That's it, right? That's the two main categories. If we take a look at top setups and we look at these scorings under technical, seasonality, and trend, those are the two things that we factor in really aggressively in score. You can see they do get 2 to -2 readings, which are, it's a heavy amount of the score. It's very simple though. When we look at seasonality, which I think we should do as a regular reminder of why indices, in my opinion, again, not financial advice, should continue into year's end. One of the reasons, not the only, but one of the reasons is that S&P 500 full year seasonality is still suggesting, historically, the pattern suggests upside. Now, you might say, no, this year is going to be the exception. And you might be right. But most of the time, if you had said that, you would be wrong. So again, that is the thing about trading that, people, it takes a long time to really understand what I'm saying there because people think they understand that, but they don't, right? A lot of people put too much leverage on trades because they think they know what the market's going to do. Whereas great trading is not about knowing what the market's going to do. It's about making an educated guess based on the data, based on the things we have in front of us, and then managing when we're wrong and then managing when we're right. Because you're going to be right, you're going to be wrong. That's trading. Everyone is right and wrong. It's just part of the game. Is how do you manage when you are right? Okay, so let's go back to this chart because I keep hovering over it. Let's cover this. Another reason that I think indices have upside, earnings smash hit. Take a look at Apple, and I want to look at some of the big ones here. We're not going to go through every stock that's reported earnings, obviously, but let's take a look at some Q3 earnings. By the way, this is the stock box. If you don't have the stock box, you can pick it up during our Black Friday sale as well. All the information for that can be found in the description down below. If you're a stock person or an index person, I highly recommend you at least check it out on our website. It's a1trading.com/stockbox, spelled exactly how it's down, stock box, right? One word. So Apple earnings, right? Apple earnings, they beat estimates. Okay, next, let's move on. Estimates were, right? Estimates are in yellow, 1.77 per share. We got $1.85. Okay, what about Amazon? I love my Amazon. I own some shares. A good bit of it's a good position in my portfolio, and got a lot bigger this week because, we had a mega beat in terms of earnings per share. Amazon beat by 25%. Give that check mark to the bulls, right? This is good for indices. Remember, this is why we're doing this. What about Meta, right? Probably the weakest of the group. You might look at this, you might say, oh my gosh, what happened? Well, hold your horses, relax for a second. We did not actually get a 84% miss in terms of the, kind of actual value of the company. Didn't crash in terms of its performance. Otherwise, if this was really how bad it was, the stock would be way down. That's not what happened. The reason we had this is because there was a one-time accounting expense that Meta did in this prior quarter, which caused their earnings per share actual, the way the accounting worked, to look horrendous. I read and looked into this. If the one-time expense had been taken out of the calculation, it showed that it would have been a nice decisive beat for Meta as well. So please, look at this with caution. Yes, it looks horrible in terms of the earnings per share actual versus estimates, but when taking out the one-time expense, The again, the Meta performance was actually incredible in my opinion. Actually, the stock I think actually got sold a little too hard. But anyways, let's continue on. Let's look at Microsoft. Microsoft, how'd they do? Boom, baby. They hit it hard and they nailed it. Earnings per share estimates were exceeded by 1.6% here. And going in line with that, we've got one more to talk about. It's the big one, my favorite stock, Google. Google absolutely killed it. $2.87 per share. I don't know if you guys know this, and I believe this is still the case. Google is the most profitable company on planet Earth. It is so profitable. It makes so much money. And, you know, a lot of people say, oh, AI is going to kill it because it's going to take away search. Well, Google has so many things going for it, not just Google search, not to mention Google search still is beating expectations. So this AI rally stuff, right? If you want to say AI is going to crash and everything's going to fall apart, you probably need to see the mega tech companies that we just went through, right? You need to see these things start to miss expectations and start to disappoint investors. We just didn't see that this week. And so again, that is another reason why I think the bull train roars on into year's end. So there's some high level stuff for the indices. Again, by the way, that stock box I mentioned, it is also 40% off. All the information will be in the description down below if you want to check that out. There's so many other tools that I haven't gotten a chance to show you on there. I'll be sharing more of that on my second YouTube channel, Trader Nick Stocks. You can search me up there if you want. It's just Trader Nick -stocks on YouTube. If you're interested in stocks, find me there. Okay, so S&P 500, very similar story. Notice how we have actually kind of retested this area and found some intraday support off of the daily chart, dropping it down to the 4-hour chart. You can see where we gapped open here and price. Both times it tested this area did find some reaction. Let's see, we may go down and fill this gap, retest it a little bit further, but path of least resistance for me. You have good corporate earnings coming out. Corporate earnings have been absolutely on fire. The economy seems to be holding up okay. Again, it's just not an environment where I can justify, you know, calling a top, right? If you call a top, if you say the market's going to crash, if you say it long enough, you will be right. But a lot of people are going to make a ton of money while you are sitting on the sidelines. Now, again, I don't necessarily think that that's like, I'm saying that with hindsight, right? I'm saying like in the last several years, a lot of money has been made while a lot of people have sat on the sidelines saying the whole thing's going to crash to nothing, right? The stock market from the 2022 lows has gone up 150%, or I should say the NASDAQ has, right? People have made, incredible amounts of wealth. And being a perma bear in stocks is like it's got to be one of the most painful things in the world, because it's just been a melt up rally built on innovation and an economy that continues to surprise people's expectations. So again, I'm not saying it will happen forever. I'm not saying it's going to go up forever and that we should be, piling in leverage. In fact, quite the opposite. I think we should proceed with caution. But I have an expression that my friend Chris Pulver and I, who come on the channel frequently, him and I talk about this all the time. We talk about the stock market. It's cautiously bullish, right? Is a general stance that we kind of always take long-term in the stock market. Cautiously, though, indicates no leverage, no, meme stocks with high leverage or huge, gambles on things, no massive out of the money call options with tons of risk on, right? Like that's how you mess a good thing up. I've been able to generate really nice profits over the years in the markets by simply taking it slow and steady and not using a bunch of leverage. So that's my thought process on the indices. I do want to continue. I also have a long position on the Russell. This is small cap stocks. I think the Fed's going to keep cutting interest rates. And I think, maybe we don't get a cut in December if we get some data that will really help if we can get some unemployment data, if we can get all that stuff cleared up, and if the government shutdown could come to an end, that'd be great. I think a lot of people are pretty tired of waiting for that. Let's hope that comes out pretty soon. But I think that if you get a rate cut in December, the Russell will love it. If you get slowed, it could cause the Russell to roll over. I have a stop loss below structure. I think we've been in a nice overall momentum to the upside. I need this area here to hold as support. If not, I'll take a loss on this one. So that is the Russell idea in some profits for now. Let's take a look at Bitcoin. Bitcoin, I am still long. This is a bit of a longer term, kind of bigger picture trade to the upside. Part of the reason here is, of course, the same stuff that I've just been discussing, this idea of a potential risk on rally into year's end. Bitcoin seasonality looks really strong. So I do like it to the upside. This weekly chart level of support, I've got a stop loss below that. So if this does not hold, I'm out of there and we'll move on from this idea. But if we can get a push back towards the highs, I just really like the risk to reward on this trade here for now. I mentioned earlier that we added, or in my video yesterday, I should say, I mentioned that we added a new feature. This is the AI generated news summary tab. It is essentially pulling data across the internet and generating a very short report card on your favorite charts. So if you're somebody who watches gold or Bitcoin or even like individual currency crosses, like you can look at like pound Swiss, pound yen, right? If you're interested in a specific synopsis on a currency pair or a commodity or an index that you trade, this is a all-in-one kind of summarized view for your daily analysis. So we've added this here recently. We built something like this a long time ago, but we've revamped it and kind of brought it to the forefront again here. I also wanted to look at AAII Investor Sentiment Survey. I thought this was also interesting this past week. Taking a look at this, what we see is that we did get an uptick in bullishness, but I wouldn't say that we're at a incredible frothiness in terms of bullishness, right? You still have a crowd of bears here in the stock market. So this is what you're looking at, the investor sentiment survey. It asks a bunch of people, essentially, what are their thoughts in the stock market in the next 6 months? And the reason I like this chart so much is it's a weekly kind of view, and we can see crowd sentiment still is bearish. This is actually still pretty high levels of bearishness, despite stock markets being near record highs. I wouldn't call it a very euphoric, full of bulls. Everyone is convinced it's going higher market. You still have quite a bit of people who are sitting on the sidelines. And of course, also, I'm sure you've probably heard, if you watch a lot of content around this stuff, you've probably heard about the money market funds, which are sitting in like over $7 trillion in cash. Like that money, I think, can come into the stock market. And if that happens, that is a huge driver to the upside for stocks. So we'll see. But bullish sentiment is on the rise. So we're going to keep an eye on that rise. If that continues to, if we start to get into a melt up mode where everyone's getting bullish, I will really probably move a little bit more defensive, which I want to also share in this video a little bit of something I did this past week inside of our VIP group. So in our VIP group, I share every trade that I take. And one of the things that I did this past week was I actually initiated a bit of a hedge in TLT, which means, as you can hear in my video here, I'm very bullish on the markets at this time. But I also recognize I could be dead off. I could be wrong. I've been, very wrong before on YouTube, and it won't be the first or last time, right? If the market rolls over big time, I'll see a bunch of comments, Nick, you idiot, you were wrong. And I'll agree with you. I'll say you are correct. Sometimes I'm wrong. I've done that many times on my channel. That's the beauty of trading, is that it's not a certainty and it's an endless puzzle and challenge. Nobody gets it right all the time. But as a hedge to this, I have started a small TLT or bond ETF long position. So yes, I am long TLT. I bought this on Friday. If we take a look at, this momentum has been forming to the upside for bonds. I still think, like I said, Fed's going to cut rates. If the economy is slowing substantially more than expected, TLT could do really well. Stocks would potentially roll over, and this would be a bit of a hedge, right? So I think that one of the bigger risks to the stock market right now is if the labor market is cooling way faster than we think, and if growth metrics sour or weaken, TLT would potentially move much higher. So I've started a small position. It's not big. If we continue to see the stock market melting up, like if we see stock market just go into this, if I'm right about this upside move into year's end, if that is the correct call, what I'm going to do is, as I bank profits and trail stops, if we get stopped out, I'm going to continue to slowly build this TLT position. You might say, well, Nick, that sounds pretty bearish. That sounds pretty cautious. But it is a very small position at this time. However, I've done, if I can brag for a second, I've done really well in this year's move. I've done really well in the last few years in the stock market, being quite bullish. But there is a time to say, okay, I think it's a very appropriate thing to rotate a little bit. Here's the monthly chart of the NASDAQ. It's not going to go up like this forever. Rationality says to potentially bank some profits and slowly rotate it into stuff that could fare a little better if we did get a more prolonged bear market. Now, you can see bear markets are infrequent, but when they happen, they can be ugly. That happened in 2022, and that was a tough year for me. So one of the things that I am personally choosing to do is, as we rally higher, if we continue to see this, up and away market, I'm going to slowly take chips off the table and pile them up in things that I think are less susceptible to violent drawdowns. Now, TLT, like everything else, bonds can have a downside move that is pretty ugly. But my plan is to diversify a little bit further and put money away in other places. So I'm looking at bonds, I'm looking at precious metals. If they give me a longer term, further downside move, I'd potentially build a bigger position. I already have long positions in gold and silver, but on my long-term portfolios, etc. But I'd be looking for further downside to build some longer-term long positions. But again, that's kind of the way I'm positioning for 2026 is I want to stay long, stay bullish on the things that are working with momentum, but stay nimble enough to also recognize, okay, let me stack some stuff away and get a little bit more defensive as, we're 3 years into this bull market. So it doesn't go on forever. I don't know where the top is, but I want to be at least diversified enough that a market downturn would not be incredibly big drawdowns, right? You're still going to get big drawdowns no matter what when markets turn down, if you are long stocks, if you're long crypto, etc. But you can hedge things out a little bit and diversify away from just being long tech stocks. So that's a personal, bigger picture plan that I have in my own portfolio. I'm curious what your thoughts are on that in the comment section. Let me know. Is it if you're bullish, right? You can be bullish, but you don't have to be all in bullish. There is a spectrum, an option to be, if this is bearish, right? Big bear over here, and this is bullish over here. You don't have to be 100% one way or the other. Like if we're talking how bullish am I on the stock market, I would say that in the April breakaway move, obviously this is hindsight speaking, but if you go back and watch my videos, you can go listen to what I had to say during April and June and July. I was straight up bullish the market. And, at that time, I'd give myself a very high bullish rating. At this time in green, this is probably where I am. I'm bullish, but I'm not, as bullish as I was when stock prices and the prices of everything was much lower. So when we had the big sell-off, I was much more intrigued. And you can do this on all cylinders. If you're like right in the middle, right? You could position accordingly, meaning maybe you keep some cash in your portfolio. Maybe you trade bonds. Maybe you buy, defensive stocks. Maybe you buy dividend stocks. Like you have all these different choices as a manager of your own portfolio. And that's the puzzle and the fun of markets, and maybe not always so fun, definitely not always so fun, but I find the challenge to be, quite exhilarating overall. Anyways, next, let's take a look at the dollar index. I talked about this in my video yesterday. I think dollar has some more upside, but I'm not super bullish on the dollar. Part of the reason for this, I discussed this yesterday in my video, was the economic surprise meter has shown some other signals here other than just the US dollar looking strong, like the euro actually getting some stronger than expected readings. The Australian dollar looks really good. I like this one. The Canadian dollar also looks strong. So if I was very, very bullish on the dollar, I'd probably do so when the dollar looks good and everything else looks not as good. But right now you have other currencies that seem to be putting up strong economic reads compared to forecasts, and the overall global economic surprise score, thought this was kind of interesting, is tilting back towards the blue territory. So maybe a little bit of strength overall in the global economy. So I'd like to keep an eye on that because again, that's part of the reason I'm a little bit bearish on gold here is global economy is holding up better than expected, not particularly bullish for gold, and may slow the pace of rate cuts globally. So again, rate cuts are the super bullish, dynamic for gold prices, and I think that we may have, some slowdown in rate cuts if the global economy is holding up okay. But we'll see. But again, I think dollar index may be headed to retest this 100 level. From there, I don't have a huge bias one way or the other on the dollar index. And I did close out. I mentioned this in my video yesterday. I closed out of UUP for a profit. So I'm all out of that trade, locked in profits from this move that I took over here. So we'll see. Actually, I took the trade over here. Sorry, I got that wrong. I've been in the trade for a couple weeks and just calling it good. I'm also still long, however, dollar Swiss franc. So I do have some long side still to the dollar index, and we'll probably take profits if this thing continues to push higher. As dollar Swiss franc on the edge finder, I thought this was interesting yesterday. No currency pair setups right now. Very rare. Usually with so many currency pairs in edge finder, like you can see, we have no setups. Now, if we go neutral, everything's neutral. So I don't have a strong conviction anywhere with currencies at this time. If anything, the only thing I've got is that bearish reading on gold. Interestingly, silver getting a much better score. I thought that was kind of interesting, but might just be the technicals here on silver. Actually, let's go look at it because I'm really curious. Silver here, and by the way, this feature you're looking at, this is the AI scanner page that we've been working on. It's probably my favorite tool within the edge finder because when I'm in a pinch, when I just want to look at a specific chart and get a reading on it, this page is where I go because it essentially does everything in one simple view. We get a view of the technicals. We get a view of the technical signals the edge finder's finding, seasonality, 4-hour and daily chart trend. We can see what institutions are doing just from a synopsis from edge finder, the jobs market, economic growth and inflation, and how these things are impacting the charts we care about. So this is my favorite page on the edge finder right now. And it changes over time. Sometimes I like looking at the put to call ratio. That's probably one of my favorite technical reads on the edge finder. But yeah, it changes. There's so much data in here that, sometimes I just click through and just browse it for fun, even when I'm not, necessarily placing trades. This stuff is really fun for me. So, it's my jam. I imagine some of you guys have that too, especially if on a Sunday you're 46 minutes into a video talking about the financial markets. You probably like this stuff too, which is awesome. So I'm glad that we can share that on YouTube. So yeah, edge finder giving silver a neutral -1 score, meaning just stuff is mixed, right? If we take a look at Chinese stocks getting the strongest signal here, I thought that was really interesting. Just take a look at Chinese stocks, just see what's going on over here. HK50 here. Yeah, I mean, this chart looks great, right? Looks really bullish. In fact, if we come into this area, that to me looks like we have upside for that to continue, especially if you get a US-China trade deal. This thing could explode through the highs. So I actually like that quite a bit. So we'll see. Other final charts here. Dow Jones. Let me just double check what's going on with Dow, right? So Dow, same concept as S&P and NASDAQ. Nothing really further to comment on this. We've consolidated at the highs here. I think, that could suggest maybe we have a little downside in the short run. But again, I still think, dips are likely to be bought into year's end, as I've discussed in this video pretty extensively. Just another foreign stock market to look at is the Nikkei. Just take a look at the Japanese stock market. This thing's melting away here, guys. This looks so bullish. So again, when I say it looks so bullish, I don't mean I'm like, oh, I'm going to go buy this on Monday. That's not what I'm saying. I'm just saying like the chart looks incredibly strong. So how would I trade this? Well, if Edgefinder has a strong reading, and I'm going to take this low here and just draw a fib. Fibonacci retracement gives me a pullback to like this 49,000, 48,000 on the Nikkei. So that would probably be where, if I was to join the trade, that's where I'd be looking. So I can't justify chasing the highs, but on a pullback in favor of the longer term momentum, I still like the Nikkei to the upside. Let's see if there's anything else here. Gold, again, crazy reading there. And someone asked me also, this is a fair question. Somebody asked me, Nick, if bonds are getting a bearish reading in the edge finder, why are you buying it? Well, remember, the edge finder is a trading tool first and foremost, right? So there are times where I use it for my trading. I don't necessarily use edge finder for kind of my hedging or long-term portfolio, kind of just sit in cash somewhere. But yeah, I bought some TLT, not as a trade. I don't have a stop on it. I don't have a target on it. I just have it in the portfolio. It's sort of a cash proxy in the sense that it doesn't move a whole lot usually, other than the big drop off that we had over here, but it doesn't move nearly as much as other charts. And so, maybe the market drops, this thing's up a couple of percent and I just take profits and move it somewhere else. But it's sort of just sitting in my portfolio as like a cash proxy. But anyways, guys, that's where I'm at with it. Remember, do not miss the opportunity. If you are somebody who is interested in the Edge Finder or our VIP signals, everything store wide, 40% off right now. The discount promo code that I mentioned is, I'll write it on the screen one more time for you, YT VIP. If you have any questions about the Edge Finder, if you need help with this, if you're interested in a payment plan, if you need to split it up into 2 payments or something like that, even with the discount, we can do that for you. The easiest way to do that is just to contact us on our website, A1 Trading, or using the link in the description down below this video. So check it out. Do not miss the sale discount. It is only available for a short period of time this month for the Black Friday discount. And if you head over to our website, a1trading.com/edgefinder, you can see it there in the top right or the top left. You can also just take a look here at your own time, all the different features. I can't cover all of them in all of my videos because, again, there's a ton of stuff built in here. But if you want to take some time to just review all the different features that we have built over the years, this is, I guess, like 3.5, 4 years in development here. Since we first kicked off the Edge Finder. So again, the Black Friday discount is the biggest one we do all year long. I know I'm being pushy here, but it is because I don't want people to miss it. And I also, transparently, we use the proceeds that we've made money on, building and selling this tool to continuously improve it. We dump, a ton of the money made back into supporting the product and building it out further. We've got more stuff to build. This thing is just going to get better and better and better. And let me be fully transparent, the price of the tool will also go up, right? So this tool is a one-time payment. You don't have to pay monthly. It's not a subscription. You pay once. And the reason that that is so preferable for so many of our users, we get a lot of good feedback on this, is because if you see yourself trading for 5, 10, 15 years, if you're the one, right? If you're serious like that about trading, this is a no-brainer. It is a very low cost per day or per week or per year. Break it into that dynamic and you see like, okay, one-time payment for lifetime access is a steal, especially when 5 years from now, I'm telling you what, Edge Finder is only going to be way better and admittedly probably a lot more expensive. So don't miss your chance. Like I said, it's 40% off. All the details will be linked in the description down below. Thank you so much for watching. Have a great trading week ahead.